Phoenix of the team.
All righty, let's do it. Ladies and gentlemen, welcome back. It is June 7th, 2022. It is 11:30 in the morning. We got a little midday chart talk coming at you. We got a little bounce out of the market. It's pulling in a little bit. Ben, you're looking pretty flashy over there. What you got? What you holding?
I got
What's in that box, huh? What's in the box?
Let's see. I'm looking at the screen.
Yeah. What's that worth? 100K? 150?
In this economy, I'm not sure what it's going for. But I just been playing with our little watch case. The first sample that we've got, and so far we've pre-sold 31% of the watches. So we got some work to do.
Stock just like that.
Yeah, we got some work to do. But anyways, guys, we're getting the market outlook. And if you are watching this and you do enjoy this video, it does cost you nothing to drop a thumbs up. If we get 100 thumbs up, I say we pick one random person who did do it, and then we'll give them a watch for free. You cool with that?
Sure. I mean, last week is if we don't get 100, I get a week off. Now I'm coming out of pocket to get these likes. All right, sure.
We gotta try something different. So you take over for market outlook.
All right. Let me get the spy up here. Share screen. Boom, boom. All right. So we got a choppy market. We got a choppy range-bound market right now on our hands. So last week, 2 weeks ago, we finally broke the harsh downtrend in the S&P. We broke the NASDAQ as well. It was a very fast and ferocious down move. We spoke about the Friday a few weeks ago. I guess markets do bottom on Friday sometimes, at least intermediate bottom. We got that capitulation bounce. We bounced up to the resistance level. They tried to take us down once more. And that's when buyers stepped up and really showed their cards, gave us a nice little rally. And now we're sitting in this choppy range. There's 417 to 407 area in the SPY. And I would say the difference in how I've handled this now versus how I would look to handle this in the past, whenever we're buy resistance, I'm looking to short. Wherever we're looking buy support, I'm looking to buy. So we got that perfect setup today. We got a nice little bounce. We'll see where we close. Intraday, we were looking for that. We were looking for that quick move lower off the open, bounce back. That's what we got. Now we're currently in no man's land. This is 411, right between this 417 and 407. So short-term direction is anybody's best guess. I personally think we matriculate higher. We test this 430, and then we commence with another sell-off. But all speculation. What are you thinking over there?
Let me share my screen.
Ooh.
Very, very similar. Again, the one key thing I'm keeping an eye on is this 10-year. The one thing I really want to see is right now we're seeing this, I want to see this lower pivot high. So this is this 3.2, 3.3 in the 10-year has been major area of macro resistance, maybe for a monthly up for years and almost more than a decade, actually, that the 10-year hasn't traded above this level. This is the fastest it's ever gotten there. And again, just like with any stock or market or sector, the faster you have these run-ups, the harder it is for it to sustain and hold that move where you would expect some kind of selling. So for me, I'm kind of keeping an eye on to see if this will form a lower pivot high, and it can then continue to kind of roll over, and that will help the equity markets. So again, I'm very similar with you. I was trying to, in the pre-market call on Monday, articulate that, again, we always want this rush back to highs. It's vertical fast move, but it's often much slower, and it gets there, it takes a bunch of detours before it can get to where it goes to, where it needs to be. I still think by end of year, I still think we can still retest the prior all-time high by the end of the year. But like you mentioned before, I do still think we need to retest this area, potentially even shake it out before that's going to be the case. But I think that, kind of now that everyone that you talk to is, the discussion is are we going to a recession, and should I get out of everything? Those are oftentimes when the consensus is that thought, especially from non-professionals, it's usually going to be the opposite. So that's just kind of for the next 6 months out, I think eventually we see a retest of the prior.
So, but here's the tricky part where I'm struggling with trying to get information out of people, where it's we have a lot of people saying, is a recession coming? But then anyone who follows the markets in a very vague sense, they're also asking me, was 2 weeks ago bounce the bottom? So the amount that people are thinking it is or might be the bottom, that's what kind of has me thinking we have another one moved higher before we go lower, because it's funny. It's like, all right, a lot of people talking recession. So this is an easy area to short, right? So they're
Mhm.
not going to break it down from here because it's too easy. So the pain trade that gives investors and traders the most pain is to continue to move the market higher from here.
Mhm.
Go, give me an S&P, baby. What are you doing, man?
So a little pre-market, a little BP scan. I got the SPY.
So the fact that people are thinking, this might be the easy area to short, that has me thinking we have one more leg higher. I'm looking at the 430 previous resistance area. Yeah, just give me a little trend line at 430. Boom. Yeah, so I think this area matriculates higher to that 430 area, and then that's the new range. Then who knows if we test lows from there. I just think that's going to be the area I'm going to get more aggressively looking to short versus right now. I'm just kind of trying to play the ranges back and forth. Yesterday I was trying to short. Today I'm trying to buy, but very very short term trades. Yeah. So I mean that's pretty much it.
I think that the one other thing again,
Yeah.
and you mentioned this a few weeks ago where you brought up the bear market of 2018, and this was a good example. The difference is just been obviously the length of time for these breakdowns and recoveries. This one was obviously much quicker, but the overall move was, and we had that run up to all-time highs. Everything looked amazing. Again, like you've mentioned in the past, bear markets come after very strong markets. We had that base market traded in, and then we had that flush lower, that kind of puke lower. And we've seen very similar action so far. We saw that base that was forming 440, 400 SPY. We broke down lower, and we haven't seen this. We're probably not going to see like this just V bottom back to highs, because like you mentioned, it would be too easy of a move. But we saw that 2 months to break down, 4 months back to highs. Now we're at 5 months into this breakdown, and maybe it could take just as long to work its way back to those highs. So we're seeing kind of similar action, just different. Like the frequency and time has just been a little bit different. So, but anyways.
Yeah. So yeah, it's funny you mentioned that. So I've been like in deep thought about this with the. I don't think like algorithmic trading has really sped up markets that much or anything like that. I just think there's so many more participants, so much more information, things that used to be, top secret information is now just, on you're getting alerted to your phone and things like that.
Mm-hmm.
So, which makes me think markets move faster, which makes me think we have that other leg up, and then we take out the lows, and then we have a very speedy recovery to all-time highs later in the year. And historically, so I'm I don't know about all-time highs by the end of the year. In my view, I'm thinking we begin that recovery in the fourth quarter, and bear markets that begin first quarter typically resolve in the fourth quarter, historically.
Yeah.
So definitely targeting that fourth quarter where it's going to be like, that's going to be more risk on time. And I think we have a lot of chop until then. We got Fed raising rates next Wednesday. So that's always an event. We're just going to have more and more of those events throughout the year. So it should be very interesting.
Yeah. Even like the broad headline. So it's like, even for this, like for 2022 will be kind of like overall seems like a wash of a year, like overall performance. Like the headline would be like S&P returned 0% this year. Like that's like the headline, but that could be, that could be the headline, but the market could be back at all-time highs. And we were in a 20% range that you could definitely find opportunities in that. But like the broad headline is, and that's even with people like the recession talk. I need sometimes someone asks me, we're going to a recession. I'm like, can you tell me what a recession is? And they're like, oh, I don't know. It's like, all right, well, if you're fearing something, at least, look it up a little bit. But for this, it's like, I can see like the headlines end of the year, like horrible year in the stock market, return 1% or 0%.
Yeah.
But then internally we traded it within a 20 or 30% range multiple times. And if you had some spots you can put some risk on, you might have done okay.
Yeah. Let me get the screen share back.
Yeah.
How do I do that?
Yeah, you're good.
So you just reminded me that this market is very, very similar to, or my thinking of this market. This is a weekly chart from 2015. I was still young at this time, so this is a very difficult year. As you can see, just very, very back and forth. Grind up higher, puke lower. This is Brexit right here.
Mm-hmm.
Another grind up higher, puke lower, grind up higher. We begin to puke here, consolidate on the level. but so it was a year that was lost, like you're kind of saying about 2022. And it ended up being a giant bull flag. And then you look how we matriculated from there. It's not so bad.
Yeah.
So if we do have that lost year or whatever it may be, it's not the worst thing in the world for action going forward from there, because they just end up being a consolidation that just leads to a launch pad higher.
Definitely agree.
Yeah. So
Want to go over some top ideas?
yeah, I got a few. I guess I'll start.
Yeah.
So I just bought this one this morning. This Dow DOW, and these names have been uptrend, and I'll tell you why I bought it, really, because I've been really researching my trading, and my best winners have been coming support buys off the 50-day. So major uptrend. So I'm buying after it retests this area, and it bounces higher off that.
Shake, you gotta share.
Oh. All right. So we got the 50-day here in purple. That's the only one I got up. So, we see every time the stock touches it, it finds support and moves higher. So now we're seeing a stock in a strong uptrend, beginning to hold that area higher. And I've just had so much success with this trade this year off the 50-day. A perfect example is this NFE I'm still in. You can see a strong name in the uptrend. And then when it's testing this area, it doesn't look that great, but it's still holding the 50-day. And then it ended up giving us an entry through this 44. Why do we like the 50-day so much? I had it up here. Institutional investors often use the 50-day as a reference point, stepping in to add shares to their positions when a stock pulls back to the moving average. So we strong uptrends, pullbacks to the 50-day. You find an entry off that. That's a very good setup. That's what I have with this Dow here. That's why I'm buying it up. It doesn't work out. I had a bunch of work out so far this year. But other than that, I like this CEQP. This one is starting to trigger now a little bit through this 30 area. Oil and gas name. These names have been killing it. Ulta. I'm not sure if this one's ready yet. Let me get some moving averages. The Ulta earnings, man, they were so good. So they got hit up. The stock moved lower on the first target earnings. Target earnings were a disaster pretty much. And they said, the first warning they came out with, they said, we're going to not kill the consumer. We're going to eat the inflation costs. So we're looking at a tough bottom line number, but our customers will be happy. So they do that. Earnings get killed. Stock gets killed. That was the first gap down. And then they came out today and said they're lowering their margins because of how much they're going to have to lower the inventory prices from 6% to 2%. So bottom line is going to be really tough for Target going forward. However, Ulta, who they have a big deal with Target, so people are thinking that they're going to get crushed on that news as well. If you look at their earnings were absolutely huge. Let me get actual numbers up. They beat earnings by 220 million, growth of 20% over a year. Comparable sales increased 18%. And then what we most love about this, the raised fiscal year 2022 guidance. They raised it. What is that? Up 300 to 500 million for the full year. So that's definitely what you want to see from that regard. They're still getting bought, even if there's a retail recession. It seems like Ulta continues to get bought. You tell your girl she can't buy makeup. I'm not doing that. So, I'm waiting for this one to set up 427-ish. That one looks good. And last but not least, this NOC. If I get a pullback in this NOC to this, 465-ish area, I would love to get long that stock. It's a tough buy up here. I missed the buy Friday, but it looks very good. There's a few shorts I'm looking at, but I'll leave them with that for now. What are you looking at? I'll stop sharing.
Yep.
Oh, you got it.
1 second. All right. So first up is OKE. One of the members called it out on Monday in the pre-market call. I think it was Eric. We can see this.
One of the members. Yeah. Hey, you got to read the shakedown, bro.
Well, they took it off your shakedown.
Yeah.
So
yeah.
Like,
who called this out?
Eric called it out.
This
And
out?
I'm talking about it. We're just trying to share Shake, we know what you do. Again, so it's OKE, which was Shake's idea. Make that very clear.
No. Stop. I don't want it. I don't want it.
I'm looking to buy up to the 68 versus 67, or I guess 66 half area. Very tight risk. We've seen 1, 2, 3. This will be kind of the fourth attempt through this 68 level that the stock hasn't been able to break since kind of end of April. So looking at that, ideally, the target in this name, like kind of short-term best case would be a retest of this all-time high. But if you get, if I can get a pop into 71, 72, I'll definitely look to take some off. That's the only order I have in the system. Probably the first order I put in the last couple of weeks. I've been very hands-off other than the automated stuff from M1. A couple other member ideas from the call on Monday that were pretty good. This XLE energy names have been very strong, eventually up through this like 77, 76 area, or even a little support buyback up through 75 quarter. A few other ones is NVST. Another little, we can see that this level has been, some resistance for quite some time now. And this is like that sneaky buyback where we tend to focus on these names as like a swing trader, often like right here. That first break, we want to be involved, and or even like these breaks. But now that it's shown us it wants to break, this has recently become kind of support, looking to kind of sneak back in. And again, same thing with that move, kind of back to that retest, those prior all-time highs. Like that's at a venture move, not in 2 or 3 days. It would probably take a month or two, but that's kind of the move you could expect, buying up off the support as it kind of works its way back towards that prior all-time high. AEP, a utility name, much lower beta, slow rain. This was a name Heaven was looking at initially through that like 100, 101 area. And we see it continues to flag and eventually through that 104, 105 all-time high could be a decent setup. And lastly, this ADI, very nice base that's been forming up through this 170 level. And it's good to see these higher pivot lows forming. This is a low, higher pivot low, and it continues to have subsequent higher pivot lows, meaning the buyers are stepping up, sellers are still kind of holding that resistance level down, and eventually one of these two people have, the buyer sellers have to kind of take charge, and we're trying to lean on the buying side and keeping the risk tight. So those are just a couple of names keeping an eye on. For me, again, I have an order in to buy this OKE. That's my main focus for the week ahead.
Love it. Love it.
Stop sharing, Chick. If you have any good and bad trades you want to go over, we can do that now.
Yes, sir. All right, I'm gonna go over some bad trades. Whoa,
Oof.
I got the headphones on. That one hurt. All right, let me start. ESAB, and this is what I'm learning about bear markets is that I gotta cut this out of my game. Is something that has made me a whole career. Oh, let me share my screen. Is just playing on volume on the very short term. So it's ESAB. And what I say by that is meaning like, we see an intraday flag, we see volume coming in crazy, and that becomes the entry, and then you give it to the low of the volume pretty much, and you kind of just sell on the way up, and then it becomes a day trade turn swing trade, and you have very cheap risk, and there's a ton of upside when the trades are working. But right now in a bear market, these trades are not working. So I'll give you 2 examples of what I'm going to cut out of my game. So it's ESAB. All right. So we got nice little base forming, recent IPO. We can see this 51.75 is the resistance area. So then off the open, what is this? June 2nd. So off the open, there's this little micro resistance 50-50 area. That's where that's where I start to get involved because I see this volume. Look at this volume. It does the whole day before. It did about 300K shares. And then in the 5-minute bar of volume, it did that amount of shares that it did the entire previous day. Mm-hmm. So I'm buying that bar. I'm like, all right, and I'm giving it to low of the bar. So I buy some, and I buy a little too high, so I get out of some. Consolidates. I'm reading a seller on the tape. Once it breaks that seller, I buy that stock back. Gives me a nice little run throughout the day. I get out of a third here. End up marking the high. All looks good. I'm like, wow, I'm gonna murder this trade. I wish I didn't even sell a third. I wish I sold less. What happens? The volume just never comes back, and it just dies from there. I turn a winner into a loser, and it was actually kind of a fat loser, and I was really mad at this one. It lost on a Friday, but again, it's seeing that volume, and it's the volume just doesn't stay consistent like in bull markets. Another example is this LRN. I'm still in this one. I learned a little bit where when something's triggering like that, this was like the next week. Just keep the size down. So we see this LRN. I'll go to the daily chart. see this nice little momentum flag. Now, what I was saying on the newsletter this week was, in a bull market, this is one of those trades where you find the volume, you load up all through the highs, you give it to low of day, you sell into strength, and it's like the perfect day trade setup. And why is it that? It gets this strong move, gets this tight consolidation, and we're just trying to take advantage of that next move higher. So off the open, we see a huge volume again. Link is 300K the whole day before. I don't even think it did 300K. So I'm buying this thing, and the trigger was 40.50. So I buy some 40, and then I end up buying 40.50 to 70. My price up here is like 40.65. It's a little too high. I don't love it. But originally, I was giving it to off the open. Originally, I was going to give it to this like the 8-day, like 39.40 or something like that. Then I started pulling it. I'm like, all right, true supports of this 39. Let me give it to 39. So because I didn't get too heavy, I was able to stay in the trade. I'm still in it, and just give it to this 39. But it's again gyrating back and forth. But again, the problem with the trade, this volume just hasn't come back. It just hasn't come back, and I've been seeing that more and more in the market, where it's like these huge orders, these huge market orders, pretty much are just getting sent, and the guy never comes back. So maybe he's filling his order on the bid or on the offer, but where it was something that was such an advantage in bull markets in the past 5 years, that's become a disadvantage to me. Buying that huge volume bar off the open. So definitely trying not to do that one as much. And then the good ones like this NFE, and this is what I was talking about the 50-day before. This is the example. It holds that 50-day. I'm buying this 44. My price is 44, and I'm giving it the true amount of room. I'm not just giving it to a random volume bar. And now I'm swinging this one. I just sold someone 52 today. So that's just a great trade out of my hands. This LNG was another one. We bought. You can see the little green areas where I got long off the inside day. Bought this 132 area, and and I have a nice little swing trade in my hand. I sold some last week. What else? We got out of this Oxy last week. Got out at the little highs off the open here. Me and Django were selling this one pre-market. Very, very sick exit. We're buying the 63, selling the 75 here. And then today I had a nice trade in the spot. So again, I was talking about this range. I was trying to short yesterday, trying to get long today. But it gave us that exact setup that we wanted, and I didn't think the spike down would happen as quickly as it did. If you look on like a 2-minute chart, this is pretty crazy, where the market just spiked down so quickly off lows off the open, pushed higher and then gave us this little flag. That's where I'm starting to get long. And I'm giving some to this area, this 408.50, and I'm giving some to lows. And then it just kind of flags out, gyrates back and forth, tries to trap some shorts, and I see promptly moves back higher. That's when I add some more stock, and I kick 95% of the stock. I'm only holding like a feeler just to give it the right amount of room and see what happens with it. Again, hitting singles and doubles in this market is really the only way to find profitability. I've had a lot of trades this year that have been winners that I've given back. So when I get these 2-to-1 winners, that's what that's where I'm looking to take profit, things like that. So it's a lot of talking out of me. What are you up to over there?
So I'm going to jump into book of the week. So we only have a few minutes left before this video ends.
Oh shit!
I got the Worldly Philosophers. This was the book I read last week, the one that you recommended. Again, my little conspiracy with all these books, they always plug other books to kind of help everyone with their book sales.
And you never end. Yeah, you never end.
Yeah, you're just kind of this whole bookshelf is like one book recommend the other one, and then
right. All of a sudden you got a shelf.
This is like this book is on like the 8 biggest kind of like we got Keynes, we got Henry George, we got all these like big like economists, even Karl Marx in here, and so it's a little bit more like educational, maybe a little bit above my intellectual pay grade. Like it's just a dense read, but they mentioned like they had one little part where it's about the Mississippi company, the C company, like one of the first big bubbles, and I forget what government it was in. In France. So the French government was trying to keep this bubble going, and they hired a bunch of like homeless people. Like they had like 1,000 homeless individuals that had dressed up, but they were walking through the streets with like these pickaxes as if they were taking boats to America to like mine gold to help keep the bubble going with the stocks, they obviously, I guess,
That's
it was like
sick,
they were
that's
just like,
sick.
they like were just doing like grimy stuff to keep like the bubble going because they just didn't want people to sell. And obviously it didn't last, but it goes, yeah, the government sought to stay.
Well, they
with
probably got
the-
this, they probably get their cells off. They got their cells off.
Yeah, so it's like, yeah, so like,
That was like the last pop, you know?
yeah, armed 1,000 beggars armed with picks and shovels and marched through the streets of Paris as a band of miners heading off to land of El Dorado to like propel the bubble.
El Dorado, huh? There you go.
There was one other good line
Colorado.
in the book so far that I found, and it mentions it's generally, it talks about like kind of difference between like the rich and the poor, and it says it's generally admitted that unless the poor were poor, they could not be counted upon to do an honest day's work without asking for exorbitant wages. So to make the society happy, it's a requisite to keep the greater numbers ignorant as well as poor. So it's kind of saying like, you know, the governments and people like the people in power want to keep the masses kind of uneducated so they can keep them doing menial jobs that the people higher up would never want to do. So again, it's a book I probably wouldn't really recommend unless you're really into economics, but definitely gonna have to push through and finish it for sure. What are you reading?
Oh man, I'm crushing this Churchill book. Winston Churchill, it's the Splendid and the Vile by Eric Larson. So it's all about Winston Churchill and how they made him prime minister like as World War II was starting, not out of a vote, just like out of necessity, because he's such a good wartime strategist and all this thing. So it kind of goes through his day to day and his decision making. Right now, don't tell me what happens. Right now, Germany just pummeled France, and we need the U.S. to come in bad, because if Germany gets the French fleet of the ships, it's over, man. It's a Nazi world. So he has to simultaneously like pump everyone up while he knows like things are the worst there ever was. So it's a great book on leadership. Just looking at his decision making, look at how he handles every strategical decision. Look how he handles the speeches. How he has this outward, almost bravado in a really tough situation, when inwardly he's not feeling that way at all. But that's what he needs to do, lead the troops. But it's a great book. Highly recommend. I've been in a funk reading. I've been trying to read all these finance books, and they're all starting to sound the same. It's all these like how-to books, and it's getting tough. So I got this history book. It's really fucking good. But that's it. That's all I got for you. You got 30 seconds left before this thing cuts out on us. You got any messages? Any last final words?
If you're still watching at this point and you haven't dropped a thumbs up, you're killing us. Hope you can do that. Again, we got the track day on Thursday. If anyone's in the North Jersey, New York area, want to come out, just shoot me a message. I'll send you the address. And then this weekend, going to next weekend, we'll be down at LBI. So again, if any of you guys are in the Jersey Shore area, let me know. We'll be down there for a week and you guys can stop by. And that's it.
See you folks next week. Done. I'm out of here. Peace.
Oh, Shake, dude. We weren't recording.
Yeah, you're funny because I see it.